Okay, that's kind of an interesting point too, because when you think about like productivity, what if you can get those folks like in the private sector doing something more productive versus these bureaucratic jobs? Like, could there be an opportunity maybe after like the 8 months? I don't know, but is there like a silver lining to that, like reducing the size of the bureaucracies, getting
Yeah,
people out there?
it's again, it's an unknown. Like you have to have faith that with what we're seeing with AI, what we're seeing with, and I think there's obviously an AI bubble, but we'll talk about that. But AI, um, getting rid of the waste and the debt issuance that's sucking up all the private capital, it's going to be a tough transition, but you're going to have faith that when people are put their backs against the wall, they'll take opportunities to be more productive and be more creative in their lives. I mean, adversity does make people more productive, those who have skill sets and take risks. And especially in a deregulated environment, a lot of new small businesses will be created in the depths of the recession.
Hmm. Yeah, that's a good point too. Okay, you mentioned AI bubble. Let's hear it.
Yeah, so that's not even part of our, thesis. That's just something that's going to happen. So I mean, I put out an X post like 2 weeks ago. I said, "Hey, in 2000 we had a tech bubble, and in 2008 we had a housing bubble. What do you say we slap the two together and see what happens?" And we think the housing is not the housing crisis that's coming. We don't think is going to be as bad as 2008, 2007, but it'll be painful. But we also have 7 stocks comprising 40% of the S&P index from a market cap standpoint. Very narrow market, and it is what it is. There's been a huge infrastructure build in AI. There's no revenues on the other side. This reminds me of the .com bandwidth boom. There was a ton of bandwidth being built with junk bonds, but no customers on the other side. That all those companies went bankrupt. WorldCom, Windstar, and that all that bandwidth didn't disappear. It was bought up for pennies on the dollar, and then we had the Web 2.0 companies come like Facebook and X, and Amazon rose from the ashes. So I expect the same thing in AI. And we just saw this DeepSeek. I'm not sure you're familiar with what's going on there, but
Oh
DeepSeek
yeah.
basically blew up the economic model of it doesn't take the amount of capex and power if you do it a little more smartly. Now there's a lot of controversy over that, and this is going to happen anyways. You cannot have the costs of AI being so huge without revenues on the other side. You would see bankruptcies eventually of some of these AI companies, and then pricing would come down, as it always does. Semiconductors are cyclical business. The prices of NVIDIA chips will collapse, and then we have a boom after that. But the AI bubble is an infrastructure bubble, much like there was a railroad bubble in the 1870s. Infrastructure build, bankruptcies, then cheap railways. Utility boom in the turn of the century. Lots of speculation and hype, infrastructure build, bankruptcies, and cheap pricing. It's kind of part of the cycle.
Got it.
So long term, it's a good thing.
Yeah. Well, yeah, lowering the cost as well. Okay, but that's not part of like the big thesis, the research that you have. And I don't want you to like spill all the goods that are in the research, but I want to ask you this because this audience, they love like hearing from guests on this topic. Okay, so let's say we have the recession. Where else do you want to be? Do you want to be in like a safe haven asset like gold? Is that something that's interesting to you?
Well, look, gold, I'll just go off of what my previous experience has been
Yeah.
and not making a call, but maybe issuing a slight warning. Gold anticipates crises, and it did gold had a very big bottom at the end of the .com boom. Then the Fed started printing tons and tons of money that fueled the real estate crisis. Gold anticipated the crisis and started shooting up because of all the money in the system. And gold had a great run. in the great financial crisis, gold went down 50%. But that was a credit event. That was a systemic issue. And so there was a margin call, and you sell what you can, not what you want to, right? So there were no bids for certain assets in there. And so gold went down 50%. I don't think gold goes down 50% in this, but I think gold will, and gold traditionally doesn't do well when the Fed starts cutting interest rates. That's just a historical correlation. And so as the Fed accelerates their interest rate cuts, gold will have some hiccups. But again, maybe this time's different, but gold a lot of people feel like the US dollar is going to die. I don't know if anyone's looking at the US dollar. It's going straight up. And by the way, when there is a recession, there's always a flight to safety, and there will be again in US Treasuries and other sovereign bonds around the globe.
Okay, so that there'll be a flight to US Treasuries. What would that mean for the US dollar then?
Well, once the crisis starts happening, the Fed starts cutting rates, the US dollar will initially take a hit, but then subsequently after that, it could probably start rising again. But it won't take a big hit. It'll take a hit because of people selling equities, repatriating their money, then buying bonds. It's kind of confusing, but the dollar's not going to collapse anytime soon.
Okay, let me ask you some more clarifying questions too. Okay, so because I mentioned you nailed the first rate cut call last year on this show, you said 50 basis points. Not many people were saying that either. When do you take? Okay, obviously you're expecting rate cuts when this crisis hits. Are you expecting them before, even the March meeting, even?
Yeah, so the only way we'll know that is just watch the T-bill market. The T-bill is the Fed usually chases the market. That's the little unknown secret on Wall Street. The market forces lead the Fed, and the Fed cuts. The T-bill right now is at, I think, 432. The
442 right now. Yeah, I see 442 right now at 5:05 p.m.
Okay.
Yeah.
And so basically,
I haven't clicked in on.
So basically, if it starts to run again before the March meeting and get to a 50 to 75 basis point differential from Fed funds, that'll indicate what the Fed's going to do. So that's for me. Forget the Fed's futures market and all the speculation about rate cuts. I just follow the T-bill.
Got it. This is my naive question, but with the Fed, when they were cutting last year, why did we see the yields go up on the 10-year?
This happens all the time. So in our report, the yield curve was inverted for the longest period ever. Then it uninverted typically what happens when the Fed starts. There's a plateau. There's that interest rate hike cycle, then a plateau period, then a rate cut cycle. When they start cutting rates, the yield curve starts to steepen. And that's an indicator. It's called the normalization of the yield curve. That's a very strong statistical signal that a recession's coming, and it's normalizing right now. So it's anticipating a recovery now down the line, but recession first.